Hi guys, welcome back to the channel, the Daily Forex. So in today's video, I'm going to share with you guys another awesome strategy that you can use, to become profitable and grow your small accounts on boom and crash indices. All right, with this strategy, you're able to use it to make profits and also grow your small account from small to big. All right, so let's get on with it. Okay, so I want you guys to pay a very close attention to everything that I'm about to share with you guys right now in this video. Okay, so we'll go over to the indicator section. All right, I'm going to share with you guys the parameters that I'm going to use for these indicators, so that we'll be able to get an accurate signal and analysis. Right, so we'll go over to the F icon, and the first indicator we're going to put that on the main window. Okay, we're going to put on the moving average on the main window. Okay, we'll set the period to 14 right here at this very point. Then shift is going to be 0. The method is going to be exponential. Okay, then you apply to close. All right, then you don't add any levels from that very point. For the style at that moment, it's going to put it on 2 pixel. Okay, with color blue. All right, put blue color for the style right there. Then you use this first red line, then you click on done. Okay, so this is how the parameters for the moving average is going to look. Okay, then the next indicator is going to put on the moving average again, but this time we're going to be changing the period. All right, this is going to be on the main window as well. Okay, I'm going to be on the main window. All right, then you put on the moving average. The period is going to be on period 50. All right, then you leave the shift on 0. The method is going to be on exponential as well. So the only thing we're going to be changing right here is the style. We're going to put the style color on red, right? Then red color, then the pixel is going to be 2 pixel. Then you click on done. Okay, so you can see now how it looks at this very point. We have blue and we have red on the main window. Okay, then the next indicator is going to be the stochastic oscillator. All right, it's going to be on indicator window 1. Right, so put on the stochastic oscillator on indicator window 1. All right, the stochastic oscillator, you put the K period on 1 at this very point. The D period is going to be 1 as well. The slowing is going to be 1. Then the price field is going to be slow and high. Okay, you put that on slow and high. Method at that very point is going to be simple. Okay, put on simple for the method. Then for the levels, I'm going to add here at this point, it's going to be level 80. Here is going to be level 20, just 2 levels, right? Then for the level 80, you add sell. For this point here, you add buy. Okay, now the reason I'm adding this sell and buy, so that you can know and get a reminder of when to, at that very point whereby you see the signal, and you're gonna get you're gonna see the sell at that very point to remind you that yes, this is a sell. Is the time for for you to place a sell at that very point. So you hit that sell button, and to get those profit from that point, right? All right, then you put that on that at that very point. Then you click on done. All right, then for the main at this very point, you put that on color white. Okay, white color. The pixel is going to be on 1. The signal is going to be the same white color, the color of your screen. The pixel is going to be on 1 with this first red line. Then you click on done. Perfect. Right, then what we're going to do at this very point is that we're going to change for the levels at this very point. We're going to put this color to black. Okay, color black, then done. Okay, here, so this is a black color, this is a black color, sell and buy. Right, hope you understand the very point. Now after I've said that, we're going to put on the moving average on indicator window 1 below the stochastic oscillator. Indicator window 1, put on the moving average. Period is going to be 10. at this very point. Then the shift is going to be 0, method is going to be exponential as well. Then you apply to close. All right, you apply to close. For the style, you put that on color green on 2 pixels with this first red line pattern. Then you click on done. So now we have about 4 indicators on our chart. 4 indicators: double moving average on the main window, moving average on indicator window 1, and the stochastic oscillator on indicator window 1 as well. All right, now when you're trading this market using this strategy, you want to make sure that you pay very close attention to the market chart and price movement. All right, so that you don't make any mistake on the market. Now at this very point, well, you remember that when you're trading this market, if you have a smaller account, you want to make sure that you manage your risk, right? Taking small price movement within a short period of time. So with this strategy, we're going to be taking about 5 to 10 candlesticks from within the range of 5 to the range of 10. Okay, so it's going to be your choice to choose. Either you take more than 5 or you take 5. Okay, you can take 10 candlesticks with this strategy, but I put it to 5 to 10 candlesticks. So if you have a very small account, you want to reduce yours to 5. Then if you have a bigger account, you want to increase yours to 10. Okay, you can see the range within that 5 and 10 for both small and big accounts. Okay, because risk management is very important when you're using this strategy. All right, now we have 2 levels at this point. We have level 80 here, we have level 90 here. So at this very moment, at this very point, this is when price gets above the level of 80 towards the overbought region. So where do you confirm your entries, and how do you confirm your entries? At the very moment, you wait until price breaks below this point here, this up moving average. Then for you to get a more clearer advantage, if you want to hold on to the market for a very long period of time, you wait until this blue moving average crosses below this red line of the other moving average. Then you go into the market for a sell. All right, you go into the market for a sell at that very point. Now when price breaks below this moving average, you enter into the market, you place your 5 candlesticks. At that very point, you place your 5, or you hold onto 10. Do not hold more than 10 candlesticks from that point. All right, you can see that even though the market spiked at this very point, it will retested again after price breaks below this blue line of the moving average. And when the blue line crosses below the red line of the moving average, it went downwards for a very long sell. So at that very moment where you see that the price here are broken below this first blue line, you go into the market for a sell. All right, the sell, you go into the market, you place a sell, and you scalp the market 5 to 10 candlesticks from that very point. You wait again for another opportunity. All right, another opportunity. You need to wait for that opportunity. Now take a look at this very moment here. Price has broken below this point. You go into the market for 5 to 10 candlesticks. Now if you zoom into the market at this very moment, 1 2 3 4 5 6 7 8 9 10 candlesticks. Perfect. Now for you to get more accuracy, you go over to the higher time frame. Let's go over to the 30-minute time frame. Going over to the 30-minute time frame at this very point, although this strategy mostly works best on the 1-minute time frame, so the main reason I'm going over to the 30-minute time frame, so that you can know where price is actually going to, right? So you observe at this very point. So what do we see here at this moment? Market have been selling for a very long period of time, so price should buy. Right? So you go over to the 1-minute time frame. What do? At this very point, since you have observed that price has broken below this point, you quickly enter into the market for a sell. Scalp just that 5 to 10 candlesticks, then you are out of the market, because you know that price have been selling for a very long period of time on the 30-minute time frame. So it's higher chance that the market would reverse, right? The market will buy. So you just quickly take that sell entries, you take your profit and you exit the market, and you wait again for another opportunity. Now if this blue line should break below this very point here, you see a good chance for you to enter into the market for a sell, although at that point the market could also spike, but price will also go to the downward trend again for you to recover back from those profits. So it's best you place your sell below this blue line at this very moment, then you take just 4 to 10 candlesticks and you're out of the market, right? So you can see how perfect that strategy is. At this very point here, you enter into the market for a sell, you take your 5 to 10 candlesticks, and even when price breaks below, market still sell for a very long period of time as well. Even at this moment here, you can see it all happened at this very point. Price broke below this point, you enter the market for a sell. You look for that sell opportunities. All right, you look for that sell opportunity. Remember that price needs to break below the blue line. The blue line needs to be above the red line when price breaks. Okay, it shouldn't be below this point. No, this blue line should be above this red line before you enter into the market for a sell. Then you scalp the market, take that small profit. All right, so now that you understand this on bull market, let's go over to crash 1000 in there so that I can show you guys how you can use the same strategy on the crash market. Okay, now we're on crash 1000 index market using the same parameters. Now how do you trade the crash market? So on the crash market, we're going to be placing a buy, trying to get those bullish candles, right, between 5 and 10 candlesticks with this strategy. Now take a look at this very point. This is the blue line, right? So when price breaks above this blue line, that is when you're going to enter the market for a buy. Although spike might come in, right? Spike might come in, but the market will still buy, just as it happened at this very moment where the market breaks above. Let's zoom in a little bit. You can see count your 5 candlesticks from this very moment. 1 2 3 1 2 3 4 5. Take a look at this very moment. Then it is after the 6th candlestick there was a spike, but even at that moment the market still buys above. So when the spike came through at this very moment, this buy recovered back the profit, back the losses from that very point, right? I hope you understand what I'm saying. So when price breaks above this blue line of the moving average, then you go into the market for a buy. All right, you go into the market for a buy, just as you see this very point. You buy the market. This is not a spike cashing strategy. It's a strategy for you to scalp the market. At this very point, price breaks below this line here, you go into the market for a buy. On the crash market, you only take 5 candlesticks. Do not exceed more than 5, right? Do not exceed more than 5 candlesticks on the crash market using this strategy. All right, so I believe after watching this video you understand everything that I've said in this video, and also join my Telegram community. On my Telegram community, I share with you guys tips, strategies, and also give you guys free signals on forex, synthetic indices such as boom and crash indices, volatility indices as well. Okay, so if you found value in this video, do it to like and subscribe to the channel, the Daily Forex, for more some tips and strategies. I'll see you guys on the next video.